Union Pacific announced their third quarter earnings this past week. They beat on earnings, but missed on revenue. To get into the details before we get into the chart analysis, let's look at this video.
Nice pop in the rails as Union Pacific post earnings gets a bounce, but Alex, it looked like there was still some growth contraction here.
Yeah, maybe better than the worst fears when it comes to Union Pacific today, because the stock is higher here by a margin of almost 3.5%. Stock up about $7 here to just under $213 a share. Union Pacific on the move after being down into this report yesterday. I think that's also notable. But you mentioned the earnings themselves. Coming in below or better than expected, but only modestly, 251 versus 245, but it did miss on revenue just slightly, 5.94 billion versus 6 billion even the expectation for the third quarter. A couple things that stuck out to me. This is the first full-time quarter for new CEO Jim Venna, who took over on August 14th. Longtime rail operator within this industry. The thought is more focus on efficiency and safety, and they seem to be making progress. At least the takeaway from this quarter is they seem to be making progress towards those goals. Improving network fluidity was a primary one that was being seen, and of course that'll lead to better service levels for shippers as well as a safer network. A couple things though to note that I think are important to take away. 7 cents of the earnings were actually due to help from a lower tax rate. So if you took that away, which of course you can't, but if you did, it'd be a slight miss versus the expectation that we have there on the screen. So that's notable. Operating ratio did deteriorate by 350 bips to 63.4. This is about 80 bips worse than the expectation was. So something to watch as well. And then going forward, it's going to be, the cyclicality. Industrial production expected to be relatively flat. What does that do to impact, things like carload growth for a company like Union Pacific?
Okay. So pretty good report considering that things did slow down. Some of the managerial decisions, and I guess the market's confidence in the CEO too, it sounds like.
No doubt, and I think having someone who's been a long-time member of the industry is, of course, going to bring confidence. This was kind of a well-telegraphed sort of transition, a few months into the job. And of course, you can see that downwards tick since the last earnings. I think that also helps to kind of lower the bar a little bit. This is going to be another one of those key themes, I think, in this earnings season across the board. Oliver, is while margin compression is going to be a key, kind of talking point and focus, a lot of these names have sold off pretty substantially quarter over quarter. And what does that do to these reactions? Do you have a little bit of the selling of the rumor, selling of the concern, and then that relief buying when it's not as bad as feared?
True. All right. And it's definitely carved out a chart very unique to itself. So to trade on some of these very stock-specific items as well kind of makes sense. Even though we think about rails as macro connected and cyclical, the shares have been very unique in terms of their trajectory. So one to keep an eye on that maybe here. Thanks, Alex.
So we're going to start with the monthly chart. And we can see a huge resistance support band at the $180 level. And on the top side, we have resistance at the $240 level. Let's go down to the weekly chart. And from a weekly standpoint, price action is sideways. It did break the downtrend. Lower low, lower high. Lower low, lower high. Equal low, and then we had a break to the upside, confirming that price is now sideways, but this last leg down you have downside bias. Let's go to the daily chart. So we have this huge gap up on earnings, but then it's been a slow grind lower. Even on earnings this past Thursday, we had a gap higher only to close lower. So the chart suggests there's downside risk. Short-term target is going to be the previous low at 200, but an opportunity potentially worth buying. It's going to be if price can decline past the $200 level and get to the resistance support band at 180. Thanks for watching. Subscribe. Please like the video.